Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. In just a few moments time, Bitcoin will be closing yet again another weekly candle. And unfortunately, Bitcoin is still sitting within the critical range between $104,400 being that of the prior weekly range high and that short-term level of resistance at 106,400. While Bitcoin sits between these two critical horizontal levels, both a macro reversal toward the downside, taking Bitcoin below 100,000, and a reversal back toward the upside into new all-time highs are both plausible. In today's video, we are going to be discussing which of these two potential scenarios are more likely, what needs to happen for one of these scenarios to activate and trigger, and of course, what we expect moving forward for both the macro and the short term. By the end of today's video, you'll have a detailed and well-rounded understanding of all of the potential scenarios, how to react and prepare, and what we expect to happen. Of course, this analysis will be diving deep into a variety of timeframes, leaving absolutely no stone unturned. This is truly a battle between the bulls and the bears. Let's get stuck into it. Taking a look, guys, at the charts, of course, we're going to be looking at our weekly, we're going to be going over our short term, we're going to be discussing our total cryptocurrency market cap, of course, the market data, the DXY, the S&P 500, and even the key macro charts. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. That is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP community, you can find out all the information by clicking the pinned comment in the free channel, looking at this post, contacting our admin, checking out our trading track record, or even watching a video to show you inside the channel. Check it out. We'd love to have you in there. Let's dive on in. So taking a look, guys, at that recent market data, let's take a look at the 24-hour volume and liquidations. Now, of course, coming out of the weekend, it is natural that we see volume on the lower side and thus liquidations on the lower side. Volume up 1.27% for 24 hours at 148 billion, so relatively low, and liquidations sitting at 214 million, up 46%, with the majority of those liquidations actually coming from longs for Bitcoin, as Bitcoin has been chopping around and rejecting from that level of resistance at around that $106,000 mark. You can see a lot of short-term pullbacks over here, liquidating a lot of overexposed long positions. So a fair bit of chop here in the short term, not too much definitive movement, but of course with that chop, we do generally see a fair amount of liquidations. Moving over to the S&P 500 and the DXY. The DXY is continuing toward the downside as expected. We are still looking for corrections to 92 to 93 over the next 6 to 12 months. Again, how quickly that plays out, how that looks will be very much dependent on how interest rates adjust moving forward. Currently, the expectations are 96.9% in favor of interest rate pause and 3.1% increasing from 0% in favor of an interest rate reduction. Now, the interest rate release will be in 2 days and 17 hours time. We'll discuss this much more as we get closer, but a very pivotal moment for the markets, of course. Moving over to the S&P 500, the S&P 500 is looking pretty decent. Now, we did see a correction on the short term for the S&P, of course, as we've seen over here. We had that short-term bearish divergence develop, which resulted in a correction back into this change of character support. We saw the breakdown of that RSI uptrend, which we discussed in our prior video to be the indication that we would see a pullback. We did see the pullback to 5,935, and we have bounced since. Again, for us to then expect continuations higher here, we do want to see that downtrend on the RSI break toward the upside. If we do see this occur, it is very, very plausible the S&P 500 is going to be continuing at least to what I think to be these prior highs. And if we break through, of course, then we enter that new all-time high territory. Overall, my overall stance on the S&P 500 is still bullish. I am still bullish, provided we remain above 5,700. Above this orange level of support. We hold above here, we expect continuations. And again, how that plays out on the short term or even the higher time frame is going to be heavily dependent on what happens here with the interest rate decision. As you can see, again, in just over 2 days, we do have that interest rate decision. But most importantly, the Federal Reserve press conference, which follows the interest rate decision, which lays the foundation for, I guess, a narrative that will develop and push the price up or down over the coming 6 weeks following this interest rate decision. So if we see the Federal Reserve, particularly Jerome Powell, have more of a bearish outlook, we could see the markets pull back. If he has more of a bullish outlook, we will likely see the markets rally. And if he continues to hold that uncertainty, which is a quote, wait and see approach, we will likely see the market continue as it is doing, which is chopping for a while, followed by flushes toward the upside, chopping for a while, followed by flushes toward the downside, but an overall general upward trajectory, as the eventual expectation is a reduction in interest rates. So that is it, guys. Let's go ahead and jump over to Bitcoin. And by now, that weekly candle will have closed. So we've got a lot to discuss. Let's jump into it. Before we jump into Bitcoin, a quick word from BitUnix, BitGet, and BingX. If you're interested in looking for a new exchange or just want to support the channel, you can sign up to any of these exchanges using the exchange links in the description down below. You've got a lifetime trading fee discount, which will help you in your trading career. And of course, you'll support me making these videos and support the content. So go ahead and sign up on the exchanges I use and I trust on a daily basis. We'll play our ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, team, let's go ahead and get right back into it. So yet another weekly candle has closed for Bitcoin, and I think this is the first time for a very long time we have seen two doji candles print for Bitcoin. First, we had this long-legged doji candle print, which was essentially a candle by itself, a bullish reversal candle. We saw the price continue toward the upside, attempting to break through that $109,000 resistance, failing to do so, rejecting all the way back down, and we have yet again printed another doji candle. And a doji candle, in essence, represents that during this time frame of price action, during this individual week of price action, we saw a lot of buying pressure, and we saw a lot of selling pressure to both sides, but ultimately the price ended up around the same price at open, which suggests general indecision. Now, indecision occurring after large rallies toward the upside is generally going to be an indication of potential reversals. Now, not always is it an indication of reversals, but it is generally an indication of reversals. So we do have to take it at face value and look at this and use this as some degree of a warning sign. We'll be discussing what that means in just a moment. Now, if we look at historic price action of Bitcoin, the last time we saw two doji candles print, when we're looking at these candles here, we had a similar price action reaction back in Feb 2025 over here. We saw again with those two dojis, we eventually saw a breakdown, but that breakdown was more of a consequence of the loss of the 62.09. If we're zooming out to the price action again, the last time we saw two back-to-back doji candles, it would have been, although I can't even find somewhere we saw it. It's been a very, very long time to when we saw it. But what I'm trying to tell you guys, or what I'm trying to show you, it is incredibly rare to see two back-to-back candles for Bitcoin print as doji candles within the price range. This is within the price range of less than $200 from the opening and closing price. So this means there's a whole lot of indecision. But if we're to contextualize why this indecision is occurring, it is because we are in a very crucial moment in time for Bitcoin. Not only from an economic perspective, okay, with what is happening from our geopolitical conflicts around the world and the tariffs, of course, and the potential trade agreements coming to a potential close, but of course the interest rate decisions coming up very, very soon. We have a lot of tension building, I guess, an inhibit the market being, I guess, unwilling to move in any definitive way until we get more clarity. But then when we're looking from a technical perspective, we are sitting above a critical level of support, which is at 104.5, 104.4 level, which is essentially the prior range high. And we've seen how the price action has reacted to deviations from prior range highs. For example, in the 2021 cycle, with our prior range high, we had that deviation, we saw a major correction. So the market is, of course, hesitant to lose that level. As a consequence of confirming deviation, we may very, very well confirm a higher time frame reversal, particularly with the breakdown on the RSI, which we'll discuss later in today's video. But with that also being said, we are sitting above a level of support which could facilitate a rally into a new all-time high and thus the next leg up. So a lot is happening within this price range, and when we move into ranges of more importance, generally there is more indecision as there's more weight to the price action to where it moves. So we do generally see a little bit more chop, a little bit more indecision, a little bit more consolidation. So I'd consider this to be rare, but still normal price action. So what does this really mean for Bitcoin? There's really two potential options here for Bitcoin. And let's start off with the bearish option, which is going to be the easiest to explain. The worst case scenario for Bitcoin here is what we have been discussing now for 3 weeks. We've been warning this is a potential for 3 weeks, and it is still a potential. The only thing that can make this potential downward correction go away is going to be bullish confirmation on the weekly above 106.4, meaning we need to close a weekly candle above this horizontal line. If we do that, we then eliminate the downward potential. But we have not done that yet, and therefore the downward potential is still there. Whether or not it's probable or not is a different question, but it is plausible, it is possible. So we need to discuss what that is. Simply put, if we were to see a weekly candle close underneath this prior range high, we would be confirming two things. Number one, we will be validating a deviation from range, meaning this price action here has been unable to sustain above our prior range high, indicating that the sellers are in control and the buyers were unable to hold the price above this level, which is generally going to result in a correction. We see a deviation set up and we see a pullback in the price action into areas of demand, potentially to this $94,000 level. That's worst case scenario. But with this occurring, we would as subsequently also see the RSI break down from the 62.09 level, which is the horizontal level I've drawn out over here. Now, historically, the 62.09 level I've marked out every single time we have broken down since 2018 over here. We have seen every single time we have broken down over the last, 10 years or 8 years or whatever it is, 8 out of the 9 times we have seen breakdowns of the 62.09, we have seen corrections of 10%, negative 10% or greater, okay? So only one of these instances, which was back over here in September 2020, August 2020, sorry, we did not see a correction. We actually saw the price rally. But every other time over here, we saw corrections of 10% or greater. So when we see the breakdown on the 62.09, that is generally representing a high time frame negative momentum shift, and it has acted as a trigger point for the past for corrections spanning between 10 to even 70%. So it will be a macro warning sign for a potential correction. Now, will it play out again? Is there a chance we break the 62.09 and don't correct? Yes, there is a chance because it has happened before, but it is very unlikely according to the collective sum of the data we have collected from prior breakdowns. So immediately we know that if we're looking at this setup, we have a deviation setup, we have the potential risk for a correction over here with the negative momentum shift. this becomes more of a realistic expectation and definitely an expectation we need to be aware of and prepare for. So the weekly close below the range high, we would have the deviation set up, we would have the breakdown of 62.09, we would still have that bearish divergence. And if we looked at prior examples of that, going to the 2021 top, okay, whether or not this will result in a macro top or just a short-term pullback is not the point. The point is to show you similar patterns of how the prices reacted. We have a bearish divergence, moving into a deviation setup, moving into a breakdown of the 62.09, resulting in a correction. So again, whether or not if this occurs, we will see a macro pullback to a new low or whatever, not a new low, but a bottom at like 70,000 or whatever, or just a pullback to 94 before we continue upwards is not the point. The point is to potentially avoid whatever correction that does come, no matter how large or small that correction is, okay? So trading from a level by level basis. That is really the bearish scenario, and that's really the only bearish scenario there is. So we're looking at the short term to finish up on that bearish scenario. For that to play out, for us to be confident Bitcoin is going to close a weekly candle below the range low, we of course need to be below 104.6, okay? And as we can see here, we've got a short-term support at 103.8 and another one at 103.2. So we will lose to 103.8 to 103.2 level, we enter this low historical resistance range, which will likely take us into that $100,000 level. And if we do see that, this level becomes a resistance, which in turn flips the deviation to the range high. It flips this range high into a level of resistance, which increases the probability for a weekly close to occur below, and thus we see a continuation down. So again, while we are sitting between these levels, we are in indecision. It is about understanding the impact of losses of these levels and what those would look like on the short term, and thus how the probabilities would shift for the upcoming weekly close and thus for directional continuations. So bearish scenario for Bitcoin on the short term is if we fail to break back above this 50 EMA. You can see here what we're doing is we're compressing between the 50 EMA and the 200. We've seen this over here again. We saw compression between the 50 and the 200. We broke the 250, we failed, and we dropped all the way back below the 200. We could see a similar scenario here. So we do not get above that 50 EMA. We may drop back below the 200 and correct all the way back down to these lows. And if we do see that, well, then the weekly candle will close bearish. Again, this is potential while we remain below this 106.9 to 105,000 on this level. This level of resistance right here is the level we need to break above. Again, this level of resistance is corresponding to this level of resistance we are riding in on the short term, this horizontal level we're discussing in today's video. Again, the trigger for a continuation upwards. So when we're looking at the bullish scenario is also very simple. The bullish scenario suggests for Bitcoin to continue upwards and thus continue into a new all-time high, we need to see two things. Now, these two things will happen at the same time. We need to see a weekly candle close above 106.4, as that would decrease the probability of a deviation setup, and in turn, we would see the RSI break upwards, which would invalidate the bearish exhaustion which has been developing, which is slowly pushing the price into the 62.09 and into a deviation setup. So if we were to see that break upwards, we invalidate the downside potential and we validate another shot at continuing into a new all-time high. What that would look like on the short term would be that these lows are able to sustain into the week and we break through 106,000, breaking the 50 EMA and pushing back through into 107,000. If we see any move like that occur, it is going to be assumed that we will continue this move upwards back into 110,000. That is going to be the bullish scenario. Now, when we're looking at future expectations and we're contextualizing, interest rates, we're contextualizing how interest rates are going to affect the market, it is a fact and it is true that this is unlikely to be a macro top, particularly when we look at the expectations of how future interest rate reductions are going to be perceived by the market, and most importantly, how that actually impacts the risk in the risk asset market in terms of the cost of debt, the terms of acquisition of debt to acquire income producing assets, the aspect of allowing those income producing assets to be leveraged to acquire more debt and thus purchase more assets. we're looking at that whole fundamental mechanical framework of how interest rate reductions impact the market. That is having a overall bullish result. And I guess the market has front run that massive, and as we've seen the market rally, a lot of people saying, oh, we're still early. The reality is we're not really early into this cycle, you know. We broke through 32,000 over here. That is when interest rate reduction talk began. That's when the talk of interest rate reductions began, and we've seen the market rally in anticipation of those reductions, which have not even occurred yet. We've had like one interest rate reduction. We haven't even seen the crux of that really occur. It's been rallying in anticipation of that. So that is something we also have to consider. When we're looking at something like the 4-year cycle, the 4-year cycle is not something I particularly love to use. I don't think it is something you should base your decisions off. I think it is purely analytical. It is good to talk about from an analytical approach, but in terms of trading, it is pretty much useless in my opinion. It has been fantastic at mapping out how the prices moved in different phases throughout the years. Will it continue to do so? That is not something I'm fully aware of, and I don't think anyone is fully aware of. No one can predict the future. Traders aren't here to predict the future. That is not our job. That's definitely not my job. I know what other people claim. So maybe some people can claim they predict the future, right? Some people claim they know what's going to happen, or they created the market, or whatever kind of crazy stuff they talk about. The reality is, a trader, it's not about predicting the future. It's not even about knowing the future. It's about understanding how the market is developing, using a set of either developed rules or preset determined rules through analytical models to collect data, extrapolate information, and then use that information to develop a theory on how you believe the price is likely to move based on historical data that has been tracked and recorded. So you develop an edge, and you use that edge to give you a statistical advantage in any particular decision you make, whether you believe it's up or down. At every moment in time, there is always an opposing risk. Even if there's an 80% probability that you believe the price is going to move in one direction, you have everything to support that, from contextual to economic to technical to price action. Some random news can come out and flip it on its head. So there's always a negative, there's always a downside risk to every decision you make. So when we're looking at the 4-year cycle, no one can say for sure that this is going to play out forever. But when we're looking at what it is from a face value and simply discussing it from an analytical perspective, it would suggest that the top is not yet in for Bitcoin. So then we have to take that assumption and apply it to this chart. We could make the connection that even if we were to see this breakdown, we see a correction, maybe that would not be the macro top, okay? When we're looking at it from a technical perspective, I would be calling a macro bear market initiation when we were to see the loss of the Gaussian channel upper band and the 50 EMA. Historically, that has triggered a macro correction towards the 200 moving average, and that would be a 20-30% drop in the market price of Bitcoin, which would be a bear market. So things to consider, guys. Anyway, guys, we're going to wrap up the video there. We're going to quickly finish up on the total market cap, and then we'll just quickly summarize this and finish up the video because it's gone for quite some time. So total market cap, very much a similar position to Bitcoin. Chop, indecision, large swings, retesting the 50, most importantly, holding the 50 EMA. Not so much the 50 EMA that's important, but it's where the 50 EMA is sitting, and that is sitting at that range low of support, okay? 3.19 trillion to be exact. So we hold above here, we're in the blue, we're in the clear, okay? We drop below that 50, we lose 3.1 trillion, we likely see a correction to 3 trillion, which again would result in the market pulling back again, not this much, but we could very well see a correction, you know, into that $98,000, maybe $94,000 level, okay? Worst case scenario, if that occurs. Altcoin market, again, is in shambles over here. It's all over the shop, holding the 200 moving average, watching to see how that develops for now. Not expecting anything too amazing for the altcoin market. We do have this downtrend has been developed, watching that trend line moving forward, okay? In terms of Bitcoin, again, we're not really set on any direction right now. We are in this indecision zone. We are watching for reactions to both sides, and we understand the consequences these reactions will have on the macro, and we have a plan of action for the macro charts. So right now, again, it is waiting to see how these interest rates are going to impact the short term of the price action, and potentially how that decision can lay the framework for future price action developments based on the narrative which that is delivered in that meeting. Thank you for tuning in, guys. Hope it was educational. Hope you learned something. And of course, I'll catch you guys in tomorrow's video. I look forward to seeing you all then. Bye.